Well, we have, as always, a packed show for y'all this morning. We're going to be talking about the crypto fiasco that is FTX, along with an election recap. We had that on Tuesday. It seems like the results are gradually trickling in come Sunday, I suppose. And then we'll talk about the 401k limits going up and whether that really means that you are able to save more for retirement. So welcome to the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Central Florida's longest running radio program, also coming to you on a host of stations throughout Central Florida. Although this morning, I don't think we're coming to you on the sports station because that's home of the Bucks, and the Bucks are like kicking off in 30 minutes over in Munich, Germany. So kudos to the NFL for figuring out, hey, how do we get the guy that probably most people around the world know best to play in a foreign country? Let's schedule a game in Munich. So anyway, although Tom Brady's going to come up later on in the program, particularly when we talk about this FTX craziness. Anyway, my name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciaries stands ready this week to help you change your life with a successful and cost-effective financial plan. So before we get to all of that, we're going to roll through. We got a bunch of housekeeping stuff, if you will, which we don't normally have on the program, but I thought we would share. We got a cluster of housekeeping stuff, if you will. So first and foremost, I owe an explanation to our YouTube viewers. What you will notice is if you're looking at me on our YouTube channel, you will notice that I am not the normally youthful-looking, clean-shaven man that I am. The reality is that here at the office at Nelson Financial Planning, we celebrate celebrate? No, that might be a strong word. We celebrate No Shave November, which is a charitable movement that basically helps to bring recognition to men's health issues. So if you stop by the office or you see the YouTube channel, you'll see that we all look a little bit more scruffy than normal. Problem is that mine kind of comes in gray, so I don't really like that. But anyway, last month, of course, we had a Pink Out Day at the office as well to raise awareness to women's breast cancer. So that is item number one on our sort of housekeeping items. Number two, let's not forget that Friday was Veterans Day. So we want to take a moment and recognize all of the veterans out there. Where would we be if it were not for our veterans, right? I mean, can you imagine that? That would be a very different world. So we certainly wanted to take a moment on the program to thank all of the veterans out there. Number three, I think I'm up to number three. We've got our fourth quarter client educational event coming up on Tuesday. We're doing it as a breakfast format. So if you're a client of the firm, not too late to RSVP to that event. You may want to call first thing tomorrow, though. Make sure we get you on the list. That event is actually going to feature a little bit of a different format. And that format is really going to be a question and answer conversation back and forth between myself and our featured speaker. So looking forward to kind of engaging in more of a conversation, if you will, rather than just kind of that standard PowerPoint presentation. So something to certainly look forward to for our folks that are coming to that event on Tuesday. That is a breakfast event. Normally those are dinner events, but we always like to throw in a breakfast event just to have an opportunity for folks who don't like to drive at night, because after all, with daylight savings, it's pretty dark out there in the evening at a much earlier time. And so we like to have at least one of our educational events. We do them every quarter at Nelson Financial Planning. So we want to have at least one of those be sort of a morning event. So anyway, that one is coming up on Tuesday. Also, staying close to home, once again, we were named the People's Choice Award winner for Best Financial Planner on the local show entitled Best of Central Florida Show with Justin Clark. If you want to see the recognition and the interview with Justin and myself, feel free to check it out. It airs on Saturday, this coming Saturday, November the 19th, on your local CBS channel, WKMG News 6 CBS. Last year, we were also the People's Choice Award winner for the Best Financial Planner on the Best of Central Florida show. So we're a repeat winner, if you will. So thank you to all of the folks out there that make that possible. Our clients, our friends, certainly we appreciate it. And it's a real honor to have received that award now for the second year in a row. So again, doing some housekeeping items right out of the gate. The next one, before we get to the elections, is that our annual toy and food drive at Nelson Financial Planning kicks off on Thursday, the 17th, where up until December 16th, clients and friends of the firm have the opportunity to drop off new unwrapped toys or food items to support Toys for Tots and Second Harvest Food Bank of Central Florida. Last year we did 3,800 pounds of food, so tremendous amount of food. And again, we thank our clients and friends for those contributions. That toy drive starts on Thursday, this coming Thursday, and runs until December 16th. Okay, so that was a litany of housekeeping items, if you will. Now we'll talk about the election. So there was an election. It was Tuesday. Results are still coming in. I think the headline this morning here, Sunday morning, was that they had called the Nevada race for the Democrats. So it appears that the Democrats will retain control of the Senate. And at least as it seems now, the Republicans will have a very narrow majority in the House. Although, when you stop and think about it, it's kind of crazy that we don't know these results because it's almost a week after and it's still undetermined. It seems like some of these places that have difficulty counting ballots might want to kind of get better at their game, if you will. But once again, as we've always said in this program, certainly elections sort of generally steer policy ship, if you will, but the economic impact can be not nearly as dramatic as what people like to think that they are. Everybody gets all worked up about elections. And I think one of the interesting things about this election is that as a country, we're pretty narrowly, a lot of division right in the center. So it's not one of those things where I think we're skewing one way or the other. I think folks generally kind of stay much closer to the center than the folks in the media would like you to believe. They really do think that, better to, excite people that it's just this extreme situation, and that's not the case. The biggest mover of the markets had nothing to do with the elections. It had everything to do with Thursday's inflation reading, because that inflation reading came in at 7.7, still pretty high, but on a downward slope from where it had been over the course of the past few months. So if you look at the inflation reading for the past 3 or 4 months, it sort of peaked in July and has been gradually, slowly coming down. That was a sort of a hint, if you will, that maybe perhaps it has in fact peaked. That, coupled with the fact that China also changed up some of its COVID policies. China still has one of the most restrictive policies in terms of COVID of any place on the planet. And so those restrictions, they started to kind of loosen, maybe a little bit, shortening the time that travelers have. Anyway, that all led to a pretty dramatic day Thursday in the market. So we're going to take a break, and when we return, we're going to recap that week that was, the elections and the inflation data, coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning. We are breaking down this week's election, but the reality is that the markets were moved much more by the inflation data that came out this past week. Appears to show that maybe inflation has peaked. The latest reading, 7.7, that's down quite a bit from the July reading that was about 8.9%. So ultimately, the markets engaged, as they have been for many, many months now, in this battle between inflation and interest rates, right? Remember, if inflation is high, you have to keep raising interest rates in order to sort of try and get that under control. But the impact of raising interest rates is always that you're trying to slow the economy. So what that means is that companies aren't going to be as profitable. So when it starts to kind of help to balance out, if you will, meaning that if you see an improvement in inflation, lower reading numbers, well, then the market gets excited that maybe the Federal Reserve doesn't have to raise rates at the pace that it has been raising rates at. And obviously the markets responded pretty dramatically. Also layered into that was an announcement out of China loosening up some of its COVID policies. So the markets had their single best day in more than 2 years this past Thursday. For the week that was, the Dow was up about 4%, the broader based S&P 500 up about 6%, and then the NASDAQ, which is typically more those tech companies, was up 8%. In fact, the NASDAQ between Thursday and Friday had its biggest two-day gain since November of 2008. So pretty interesting in terms of the market's perception of how those higher interest rates ultimately affect those tech company earnings. Tech companies typically borrow a lot of money. It's a capital intensive type of business. And so when you borrow money, you want that rate to be as low as possible. Otherwise, you've got a bigger expense, and then that cuts ultimately into profit. So certainly some interesting developments this past week. Yes, of course, there was an election. It appears that the Democrats will retain control of the Senate. Republicans will have control of the House, but the margins are very, very skinny. So anyway, watch the inflation data. That is obviously the most important thing. It certainly was the most important thing for the markets this past week. So welcome to the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Hosted all these many years by your friends at Nelson Financial Planning. As we mentioned at the top of the show, we recently were announced as a two-time winner of the Best Financial Planner, the People's Choice Award for the Best Financial Planner on the local program Best of Central Florida with Justin Clark. If you're interested in seeing us accept that recognition and be interviewed, that's going to be on air on your local CBS Channel 6 station next Saturday at noon. So make sure you check us out there. So speaking of things that happened also this past week, we've got to get to this story because it seems like it is blowing up pretty dramatically. And I think it underscores risk, reward, speculation versus more traditional types of investing. And what we're talking about, of course, is this FTX crypto fiasco. And when I started sort of putting some thoughts together for the program as that was occurring on Thursday, Friday, I thought this is pretty bad. And then lo and behold, some additional news came out yesterday that made it even worse. So let's talk about who FTX is for those of you who may not recognize them. They are a cryptocurrency exchange. They spent a ton of money on marketing. When I say a ton, crazy amount of money on marketing. Their name was on the Miami Heat arena until yesterday when they were declared bankrupt, and then the Miami Heat said, I don't think you're going to be able to pay for this going forward, so we need to go find a new named sponsor for our arena. Also a very heavy celebrity endorsement kind of thing. Like it seems like a lot of these crypto exchange companies are leaning heavily into that celebrity endorsement stuff. So with FTX, it was the likes of Tom Brady, who we talked about earlier in the program. That's why the show is not on our sports radio network, because the Bucks are playing in Munich, kicking off probably about in the next few minutes. So Tom Brady was part of the celebrity endorsers. It was Steph Curry, it was Shaq, it was the guy from Shark Tank, Kevin O'Leary. I mean, it was pretty dramatic in terms of the number of celebrities that they had on their roster to promote their cryptocurrency exchange. And in fact, there's a lot of talk in the media online about this particular piece of the equation, but they spent millions of dollars on a Super Bowl ad. The Super Bowl ad featured Larry David, who is co-creator of Seinfeld, also is on Curb Your Enthusiasm. And it's as with all Super Bowl ads, right? They have a tendency to be somewhat entertaining. So you have a very recognizable person, a comedian, and the ad goes through different inventions throughout the course of time, like the wheel, the light bulb, things like that. And at each one, Larry David plays this guy who says, I don't think that's a very good idea. I don't think that's a very good idea. The last one, and if you Google it, you can find the ad pretty easily online even now. The last one is somebody explaining to Larry David in sort of present day that about FTX and its crypto and all that. And then, to continue the bit, if you will, in the ad, he's like, I don't think so. There's a lot of folks that are thinking that maybe that ad may have had a lot more truth to it than most advertisements these days. Certainly, if you are a regular listener, you know our view on this crypto stuff. Been saying it for years. Highly speculative asset class, nothing really backing it, whose value is only what it says. And frankly, for us, the tipping point in all of this analysis was, in fact, that Super Bowl ad, along with a number of Super Bowl ads that were airing this past Super Bowl that were all about crypto. And the reality is that, I guess, as we described it earlier this year, that there is a Super Bowl ad indicator. If you listen to the program on a regular basis, we talk about the Super Bowl winner market indicator. Well, I've got a new one now. It's the Super Bowl ad indicator. And if you are sitting at home watching the Super Bowl, you see a bunch of ads for kind of the same thing, and it's all companies that you've never really heard of or it's new, then that's probably a bad sign. We saw something exactly like that play out in January of 2000, right at the apex of that dot-com bubble. So watch out for the Super Bowl ad. Still a few months away, I guess 3 months away. So we'll see what new ads are on there. But here we are. And this FTX stuff, guys, is a real mess. They filed for bankruptcy on Friday. It's unlikely or highly questionable whether depositors are actually going to see any of their deposited money. Estimated $16 billion in assets. The reality is it was doing some funny stuff with its accounting, using billions of customer assets to secure loans to its affiliated entity, Alameda Research, that at last count owes FTX like $10 billion. So you got like a company, you're like loaning to a company, and it's a sister company. It's just unbelievable. We're going to take a break. When we come back, we're going to wrap up this FTX thing and really drive the point home of why you need to be very careful when you're investing in the next big thing, that it's not just all smoke and mirrors. Coming up here on the program, Dollars and Cents with Joel Garris of Nelson Financial Planning. Talked a little bit on the program today about this FTX disaster, the crypto exchange that declared bankruptcy on Friday. If you think the story is bad there, it only gets worse. Speculation coming out that, in fact, of the $16 billion in customer assets, it had loaned like $10 billion of that to like a related entity, and so the related entity owes them back 10 billion. And now the latest headline yesterday, apparently there was a hack that stole 400 million of assets out of this. Just an unbelievable turn of events that ultimately leads to us creating our Super Bowl ad indicator. If you're sitting there at home watching the Super Bowl, and lo and behold, there's a bunch of ads that are getting run advertising something new and exciting, and it's all kind of multiple ads, the reality is that maybe you should sort of be scratching your head. Not unlike what we saw in 2000 at the peak of the dot-com bubble. Certainly Super Bowl littered with those crypto and crypto exchange ads. Now it appears all of that just absolutely imploding. The leader of the firm, a guy by the name of Sam Bankman-Fried, worth at the beginning of the week about 30 billion, today worth zero. So the fastest evaporation of $30 billion ever, and there's some speculation now as to his whereabouts, because I suspect as more of this comes out, particularly when you're lending to affiliate entities and all of that, generally the SEC and the regulators sort of frown on that kind of activity unless it's really, really fully disclosed, and it doesn't appear that it was as disclosed as it should have been. I suspect that there will probably be some jail time for the parties involved. And so we will continue to watch that story, but certainly it just underscores what we always have said on this program. If it sounds too good to be true, it probably is. One of the alluring aspects of a lot of these crypto exchanges is that they said that you could leave cash money. They didn't actually have to put it into crypto. You could leave cash money there and get like 9-10% types of interest. And the reality is that they were taking your assets and loaning them and then promising these high interest rates on it. We certainly had several conversations over the course of the past year with folks that said, oh, it's perfectly legitimate and I'm making 9% on my cash. And the reality is that we just kept scratching our head. And at the end of the day, if it sounds too good to be true, folks, the reality is it is. This is going to be ugly. And this is probably just the beginning of how all of that will play out. Company leaders probably will wind up in jail. Celebrity endorsers will probably face some lawsuits if that would be kind of the normal. So remember our Super Bowl ad indicator. If it's something or some industry that is brand new that buys up a bunch of ads on the Super Bowl, probably might want to stay away from that. So anyway, welcome to the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Central Florida's longest running radio program, also coming to you on a host of stations throughout the Central Florida region. We also happen to be one of the top 25 financial planning podcasts on the World Wide Web, and most recently announced as a 2-time People's Choice Award winner for Best Financial Planner on the program Best of Central Florida with Justin Clark, that will air this coming Saturday at noon on CBS Channel 6. So my name is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where our team of certified financial fiduciaries stands ready this week to help you change your life with a successful and cost-effective financial plan. Speaking of tips that you can gather from us at any point in time beyond this radio program, we of course do blog posts on a regular basis, and so we wanted to alert you to our latest blog post that we put up earlier this month, and it recaps some of the changes that have to deal with Medicare. One of the things that was passed back in August, named the Inflation Reduction Act. I'm not really sure if it's going to successfully do that, but most of folks think of that act as having a lot of provisions relating to green energy, climate change, stuff like that. The reality is it also had a lot of changes or instituted some changes to Medicare as well. So this month's blog post on the website, Nelson Financial Planning, talks a bit about what those changes are. We'll just recap them here for you real quick. If you're interested in getting more of the details, again, we encourage you to go to our website, Nelson Financial Planning, and there you will get the full discussion on our latest blog post. But anyway, so in terms of some of the Medicare changes that the Inflation Reduction Act did, it boils down to sort of four key points. Number one, the ability to negotiate drug prices, although it's not a lot of drugs and it doesn't really start for a few years. I think it starts in 2026 with like 10 drugs, and then over time gradually increases the number of drugs. But it does give the power for Medicare to negotiate drug prices. It also seeks to cap out-of-pocket expenses in terms of drug costs at $2,000, but that again doesn't take effect until 2025. What it also does is it does set limits on insulin prices, where you're going to pay a maximum of $35 per month. The good news is that that starts in January of this year. So if you're on insulin, know that you now got a different maximum out of pocket for that. And then, of course, the notion of free vaccines, obviously COVID, flu, those are typically free, but things like shingles aren't. So consequently, those are some of the changes that happened to Medicare in the Inflation Reduction Act that passed in August. If you're interested in learning a lot more about kind of the nuances or the details of each of these changes, just again, go to our website, Nelson Financial Planning, and check out our blog post. Also in that same blog post, we added in a little bit about some tax changes for the year 2022. As is always the case, there is a lot of them. With the inflation adjustment, some of the tax brackets sort of shifted more than what they have in the past. But also other things went away. The expanded child tax credit, the expanded dependent care expense credit, those went away. They were around for 2021, but not for 2022. Similarly, the charitable deduction that you were able to do, regardless of whether you itemized or took the standard, sort of an additional charitable deduction of $300 per person, $600 for a couple, that also went away for 2022. Increasing requests for details involving transactions of virtual currency sort of goes hand in hand with this whole FTX conversation that we've been having on the program. You know, the Journal also has an article entitled something like, the crypto disaster only gets worse because now the tax man cometh. And that's one of the things that they are looking at particularly. And then, of course, the additional tax documentation, if you do sell anything on places like Amazon or Etsy or those types of things, you're going to get a tax document on that. And the threshold for that for this year has lowered dramatically. It used to be you had to have 20,000 in gross sales. For this year, it drops all the way down to 600. So a lot of people are going to get some tax documents that they've never seen before, thanks to some of these tax changes. And then, of course, retirement plan contribution limits also increase. So anyway, a lot more information on those tax changes for the year 2022. Just check out the blog post on our website, NelsonFinancialPlanning.com, and you'll get to see all of the full discussion of those changes to Medicare, and also some of those changes on the tax side of things as well. So one of those changes on the tax side of things is this notion that 401k contribution limits, IRA contribution limits for 2023 went up. They were adjusted for inflation. So we'll have those numbers. If you've missed those, we'll have those new numbers for 2023. And then we'll also kind of just put some perspective on it as well. So that'll be what we talk about in our next segment. So stay tuned with us through the break, and we will return here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Welcome back to the program. We're talking a little bit about the change in retirement contribution limits and what it really means. It might not be all that big of a deal, especially when you start to put some perspective on it, right? So we all know with inflation being as high as it is, a lot of things were adjusted by the IRS beyond just sort of tax brackets and standard deductions and things like that. Also adjusted was the amount of money that you could put into a retirement plan for the year 2023. In fact, it was the largest percentage and dollar increase in those contribution limits that we've ever seen. Of course, inflation also is at a 40-year high, so that sort of goes hand in hand, if you will. But the 401k contribution limit for the year 2023 up to 22,500, up from 20,500 for this year. If you're over age 50, you get to put in a little bit more, or actually a lot more. Total of 7,500 is that catch-up contribution if you're over age 50. Versus 6,500 for this year. So aggregate gross total, if you're over 50, you get to shelter $30,000 into your 401k retirement plan. Even the IRAs also will see for 2023 a bit of an uptick, 6,500 from 6,000. That age 50 or over age 50 catch up remained at 1,000. So total amount you could put into an IRA or Roth is a total of 7,500. So sounds good, right? I mean, that's the good stuff, because obviously that means you can put more money in. The tough side, if you will, is that those higher limits don't actually put you further ahead, right? Because after all, these adjustments were inflationary based. So when you have an inflation adjustment, it really only puts you at the same level that you were at, because the reality is that everybody is winding up having to pay more for things. That's the very notion of inflation. So, okay, great, I can put more money away, but I'm going to need more money when I get to retirement because of the impact of inflation. So the reality is that these inflation adjustments are just that. They're meant to sort of keep you even, not to necessarily put you ahead in terms of trying to save for retirement. So I think the important thing to be thinking about is that there are sort of two key takeaways, right? Number one, you obviously want to adjust how much you're putting into your plan at work. If your goal is to maximize it out, know that that has increased from 27,000 up to 30,000. That's about a 10% increase, or over a 10% increase. So you need to adjust your contribution rates that you're doing with your employer in order to make sure that you are maximizing your out. So that's number one, is that you want to certainly adjust those contribution limits to make the ability to max out a reality for you in 2023. But also consider this, because these inflation adjustments really are intended to keep you even, if you will, based upon the impact of inflation. But consider this in terms of sort of adding additional types of accounts into the mix, if you will, to broaden your retirement picture. And what we're talking about there is sort of a regular investment account, what some people may refer to as a non-qualified. We like to just simply call it a regular investment account. Think of it almost from a tax perspective as an extension of your checking account, except of course it's not just sitting in cash. It's going to be invested. And so those types of accounts, though, the beauty of them is that you can access them at any age, and the tax implications when you access them are much lower, because you're talking about after tax money that went in, so that part doesn't get taxed again. You only get taxed on the gain that you had on those assets. So one of the things to be aware of is that you do have other options beyond sort of that traditional retirement account, 401k, IRA, things like that, that I think it's going to be more imperative to be thinking about and to include that in your overall financial plan more so now than ever before. Because if inflation is as high as this, and Arguably, we don't expect it to continue to stay around the 7 or 8%, but if it settles down at 4 or 5%, that's still going to be about double what it was over the course of the past 15 years. So that's got to be more into your thinking than what it has been certainly over the course of the past decade. And so in order to address that, then it's imperative that you kind of look at, how do I open up or start other investment accounts that I can also contribute to? A regular investment account or an after-tax or a non-qualified account is one way to do that. No age restrictions on that, no limit restrictions, no income restrictions, all certainly available to do at any point in time. So you may want to really think about that, because the reality is that these inflation adjustments on these contribution limits for retirement plans really kind of keeps you even. It doesn't get you ahead. So if you want to get ahead, then you're going to have to do something differently on that. Similarly, speaking of trying to kind of save more, because you're certainly going to probably need it in retirement, here comes the latest survey of Americans. This survey was conducted by the folks at Northwestern Mutual, a survey of 2,400 people earlier this year. And the results showed that Americans think that they need at least $1,250,000 in order for retirement. That is a 20% increase from a year ago. So it's interesting just that there's just these past roughly year of inflation has really kind of hit people pretty hard, because now in terms of retirement, projecting and thinking about kind of the numbers that you'd like to have, most Americans have sort of added an extra 20% into sort of their target date number. So most Americans now think you need, $1,250,000 in order to retire. Also, the expectation of retirement age also increased up to 64 from 62.6 years. Those are the results of this most recent certainly. So certainly market volatility, rising inflation this year sort of skews those numbers as well. Certainly causing people to sort of reset their perspectives and definitely increasing the need to try and save more money. And that's when these other types of accounts, these regular investment accounts, are a great option to help really supplement what you're doing on the 401k retirement plan side of things. So anyway, that's about it for the show. We certainly appreciate you listening on in to Dollars and Cents. If you'd like to continue the conversation or perhaps talk about your personal financial situation, just reach out to us. Our website is Nelson Financial Planning, or you can call the office during business hours, 407-629-6477, and we'll be happy to schedule a absolutely free conversation with us at any point. Have a great rest of your Sunday.